Hi, my name is Michael Waits, and welcome back to Insurance for the New Possible, a Chubb conversation. Adrian Davis, commercial leader, financial services, insurance, and enterprise financial products at Adyen, and Sebastian de Zulueta, head of digital business EMEA. Insurance is not just evolving, it's being redefined. From embedded products to AI-driven personalization, the future of protection lies at the intersection of digital experiences and financial infrastructure. But one crucial piece often goes unnoticed: payments. Are payments an afterthought for some insurers? What would happen if insurers allow customers to pay they want to pay? And what might it look like if payments, customer acquisition, and claims were all unified on one platform? Gentlemen, it's great to have you both here. How are you doing today?
Very well, thanks.
Very well, thanks, Mike.
It's awesome to have you here. Okay, let's just jump right into this. How can modern payment infrastructure unlock innovation across the insurance value chain from customer acquisition to claims? Adrian, why don't we start with you?
Okay, that's a big question.
Yeah.
I think payments is the gateway to enabling efficient capital movement through an insurer. And as you pointed out in your intro there, that payments are absolutely essential in starting that journey for many customers.
Yeah.
But the curiosity is that for many insurers, they don't necessarily recognize that. If you speak to a C-level insurance exec about payments, they will generally roll their eyes because payments isn't something that's talked around a boardroom table.
Interesting.
The reason being is that it's seen as a low-level activity that they've always done. It's done somewhere downstream in the organisation. And there's a gap. There's a gap in perception between insurers at a C-level and the importance that they place on payments, and the research that customers tell us about the importance of payments when making a purchase decision and buying that insurance policy in the first place. So there's a big disconnect. There's a bit of a blind spot.
So I want to get to the research because I think that's going to be important. But let's get to that later. Seb, I want to ask you, when you think about insurance and claims and even customer acquisition, do payments come up in the conversations that you're having, and have they always, or is it just a new thing that's being considered? And what do your clients tell you as well?
Yeah, it comes up, but just not under the sort of the banner payments, because ultimately it's about conversion, UX, just end-to-end seamlessness, which is obviously the talk of the day with anything that's transacted today anywhere, online or offline. But certainly in the world I'm in, digital embedded insurance, payments is key, because really without seamless payments, without great conversion and a great UX, you'll disrupt the value. So yeah, you can just see payments and insurance, or certainly digital insurance, just becoming increasingly natural bedfellows, and increasingly strategically important to one another.
Yeah, I mean, it's interesting for me, right? Based on all the conversations that I have, we talk about a lot of different places where digital transformation is really changing the way insurance gets enhanced across the value chain. But this is kind of the first time I'm having a conversation about how payments are actually changing the way people think about this, and even how it impacts conversion. I'm curious about this, though. And so we'll start with you, and then we'll go to Adrian. How is the insurance industry, when you think about it, being reshaped by shifts in consumer behavior? And maybe that behavior is being driven by what's happening on other platforms, and particularly some of these distribution channels, these new distribution channels, yeah?
Exactly. And I think the shift is, as you say, new distribution channels, kind of captive markets, brand power, etc. Some of the partners we're working with today, we just see it's incredible. They may have never had anything to do with selling insurance, yet they have this incredible ability to distribute products to their customers, products that are really relevant and contextual and accurate, and done in a way that makes it easy for the customers to convert. It's such a game changer because I mean, it's kind of, I always say it's a bit like cheating, because you've literally got the customer base right there,
right,
saying, yeah, we're ready for your product. So it's extraordinary, really. Whereas, previously the old-fashioned way of doing an insurance product distribution was, you'd sort of do some market research, build it, might take a year, release it, and hope for the best. And obviously the success rate was pretty low, generally speaking. But nowadays, you can test, iterate, work with your customers, use data to improve. So the customer behavior is, and that shift in customers trusting brands, consumer brands so much, just means that there are all these new distribution channels now. And we're seeing customers who've never bought insurance before ever, who are buying products because they're being sold in a contextual, embedded fashion. They're easy to buy, they're relevant, people can see the value, and they're priced in a way that works with their budget. So it's a really new industry, I would say, within the industry. And I agree with all the ridiculous growth statements out there, that the sort of multiple trillions. Actually, now I'm working in this area, I can absolutely see that being a reality. It's this whole game is just going to get bigger and bigger and bigger.
And Adrian, how do you see these shifts in consumer behavior and evolving distribution channels? How does it look like from your perspective and from Adyen's perspective?
If I just continue from Seb's point about embedded, I think embedded is actually the culmination of a lot of these external trends that we're seeing in terms of how individuals want to buy insurance. But taking a step back from that, insurance isn't homogenous. It's even just trying to simplify it a little bit more for the benefit of your viewers. I mean, the way that we see the world is that there are a bunch of traditional insurers, some legacy insurers, might be domestic, possibly more likely to be international or global. You've got a bunch of really interesting insurtechs that are really pushing the envelope in terms of innovation, particularly in this area of CX. And then, of course, we've got the embedded insurance side of things as well. And I think, when you look at what's going on in the market for insurance, and you look at the demographics and the digital natives who are now they're not comparing insurers against other insurers. I think this is part of the problem. Insurers benchmark themselves against their competitors. That's not the case at all. It's just buying a service, and you expect the same. You expect the same customer experience if you're buying something on Amazon or taking out a Netflix subscription. It's got to be seamless. It's got to be quick. It's got to be relevant. And I think insurers are having, on the whole, difficulty catching up to that expectation. Again, the research that we did at Adyen in conjunction with EY was incontrovertible in terms of the evidence that it provided. It demonstrated, because we researched over 3,000 purchases of insurance and 50 insurance execs, there's a big gap in the expectations of the customers and the insurers, whereas the insurance execs don't see payments as being particularly important to drive a competitive advantage. Consumers are telling us a completely different story, and they're really frustrated at that point of contact or that point of purchase where the insurer is telling them how to pay for it rather than the other way around. So there's a fundamental disconnect here. The other trends here, and insurtechs are definitely showing the way, because they're thinking that their whole center of gravity is around what the customer wants and how they're going to buy. So they're really upping the ante for many of those traditional insurers. Embedded insurance for me is a culmination of all of these forces for change, because as Seb just said, this is almost the ultimate insurance purchase, because it sits behind another brand. Yeah, it's entirely relevant to the individual purchase that's being taken place, and in its best iteration, it's something that doesn't slow down the checkout. It's just seen as a natural extension of buying the product or the service.
So you make an actually really good point, and I hadn't thought about it in this way up until just now. But so many of the platforms out there, right, whether they're travel platforms or airline platforms, right, you're always paying in advance, and it's, in some cases, right, if you want to get the best deal, it's no refund. But you can buy insurance on that, and then that gives you the confidence to say, oh, even if it's no refund, if something bad happens, something unanticipated happens, I'm actually happy to make both of those purchases. And that's actually a really good example of this point that you're trying to make, yeah?
Absolutely. And I think Chubb's evidence it certainly backs that up as well.
For sure.
And I just think it's a really interesting dynamic that, if you're a large retailer, be online or physical or a combination of both, I think there's actually a really interesting proposition there that can actually lead to, well, not just more purchases, but higher levels of customer satisfaction and, crucially, I think, better customer loyalty as well.
Can you talk a little bit about how payments, and this is for both of you, right? But let's start with you, Adrian. Can you talk a little bit about how payments and the coverage gap are being addressed with artificial intelligence, and because of all the data that you're gathering, how that impacts the way you look at delivering the product to clients, whether it's on the payment side or on the insurance side?
Well, there's a lot of clever stuff going on behind the scenes with the payment routing, ensuring that the least cost route is taken, but also a lot with authorization and preventing fraud. Yeah. And that's all integral within Adyen's offering. And it leads to much better performance. I mean, it's really quite incredible how the technology helps these days. And when you've got access to such a significant data set on one single global platform as Adyen has, then we're able to use that data to make some real big business impacts on our clients, increased auth rates, or just ensuring that customer flow is seamless. When you combine that with the opportunities that Chubb are developing around being able to buy those policies instantly at that point, this is where it all converges and becomes very exciting. I think where most insurers benefit from AI, machine learning, and other forms of automation is the back office. It's assessing claims. Yeah. It's taking out those manual processes, quite often performed by humans, and just being able to take out a large amount of operational cost on that basis. I wouldn't say I'm skeptical about the front end, but we've got to recognise that insurance is a regulated financial product. It's not quite as simple as some agentic commerce companies might make you want to believe, that it would be simple to scrape together a number of different offers for you, because they have to be suitable for the consumer, and they need to be cognizant of the regulation there. So I think in time it may happen, but I think for most insurers, and we've got to remember, some of these insurers are struggling with modern technologies at the best of times. But I think the majority of impact will probably be behind the shop front rather than in the consumer's eyes for the time being. Yeah. But that may, of course, evolve.
Yeah. I mean, I'm on record as saying I'm a big believer that this is an enabler, not a replacer, and that I think that people actually want, and we talked about this offline as well, I think people make visceral connections with other people, and that as great as some of these other technologies are, when push comes to shove, I want to talk to somebody who can explain something to me. I want to look them in the eye and be able to trust them. This is like my feeling, and I think that's part of what you're saying. Adrian, I want to dig a little bit deeper into this into these three things that you mentioned earlier. One of the things that we talked about in introduction, right? This separation between how insurers, insurtechs, and embedded insurers and embedded finance people understand just like the necessity and how crucial payments are. Maybe you can dig a little bit deeper into this reasoning around why traditional insurers may not understand why the payments thing is so important, and then maybe help me figure out where it fits in and how it helps conversions as well.
Yeah, sure. And I think, when we talk about the traditional insurers, of course, many of them for many years have gone through third parties to sell their policies to individuals. So in a sense, some of them are a little bit behind in terms of modern thinking about customers and segmentation and how and etc. But I go back to my earlier point that we found it difficult engaging with C-level execs in insurance about payments because they just didn't see the relevancy of the conversation. So we had to take a step back and we had to do something a bit different. Instead of talking about payments and what Adyen provides, we did a bunch of research with many leading insurers to find out, okay, so what are your top business imperatives? And interestingly, it was quite clear that there were three major things that the modern insurer is interested in and is targeted with and is part of the corporate plan. Number one, unsurprisingly, is about digitizing channels to customers, modernizing those digital channels, so be more relevant to the demographic that they're seeking to target. And that, of course, is the theme of much of this podcast. Number two, and this is mainly the traditional insurers, but they are under pressure to take major permanent cost out of the operation of their business. Cost is an absolute imperative for them, which talks to the automation point. And number three, obviously they're very interested in risk, they're insurers, but fraud. Fraud is a major issue for many lines, both in the UK, in EMEA, in the US, across the world. It's a major problem. When we identified these three key goals that insurers were seeking to pursue, we engaged in those conversations. We had some really good conversations, but then the C-level insurance exec would say, "Okay, Adrian, that's great. You're right. This is exactly what we're interested in, what we're trying to pursue. What's it got to do with payments?" But what we were able to do is to weave in some conversations about payments that demonstrated that actually payments can really help you across all three of those: modernising your digital channels, taking cost out, and minimising fraud. And when we were able to do that, it was quite interesting because we told stories like fraud, because they would say, "Okay, Adrian, you can stop payments fraud." Yes, of course, absolutely. We're world leaders at that. But I'm actually talking about claim fraud.
Right.
And they're like, "How can a payments company help me with claim fraud?" And so we tell them a story about how many insurers, my controversial contention would be that they aid and abet fraud because they pay out in checks or cash or account to account. What we talk about is using things like issued cards, virtual issued cards, that you have a crash, your auto insurer assesses the claim, agrees it's legitimate. Well, they send you a virtual card to your phone. But the crucial thing is that virtual card is restricted. So, for example, let's take Aviva here in the UK. If Aviva has provided my policy, then this card could be restricted to Aviva's approved auto repair stores. So it can only be used there. And what that does is it creates a closed loop. The money is going to the consumer, but it can only be spent for the purposes that it was intended. And in one fell swoop, we create a closed loop. We eliminate the risk of fraud. Now, that's when a penny drops. That's when C-level execs and insurers say, okay, now I understand how payments could be relevant to my business and the business objectives that I'm seeking to pursue. And it opens up a conversation. The second quick point I'll make, Michael, is
Please.
that once we've arrived at that kind of destination where actually I probably do need to listen to understand how payments might actually help my business, what we find is there's a second order problem, because even if we can manage to convince the insurer that actually there is an issue with payments, they then think, "Oh my God, this is going to be really difficult. We've gone through years of digital transformation. We're still going through it. We've got loads of consultants here. We haven't got the time or energy or resources to be able to think about this." But what's really interesting is that it doesn't really need to be that way. With many modern payment solutions, these are just API links that can embed seamlessly within the organisation. We were up and running within 24 hours, pay-ins and payouts. So this perception that this is difficult to tackle is incorrect. It's one of the fascinating things about working in payments and insurance that it takes a little while for people to recognise there's a problem in the first place, and then also recognise that the solution isn't out of reach. It's quite easy to achieve.
I feel like what that conversation that was just had is kind of bringing a few things together. It's bringing together, if you're making payments in a way that's manual, you lose the ability to analyze all the data, which is one of the things we already talked about. And I feel like the next three things that you talked about, digitizing the channels, taking costs out, all lead to this idea of, well, now I can actually understand where my fraud's coming from, because all of these things I'll make the contention that all of those things you mentioned are actually interconnected. And just my opinion, but as you said earlier, if you're using artificial intelligence to then do the analysis on this, your ability to understand fraud at scale probably just becomes much easier. I don't think that's that controversial at all. What do you guys think?
I completely agree. I think, the proposition for us is that seeing a lot of that data, that payments data, in fact, in many cases, we're in a very privileged position, because if we're working for a large enterprise, we probably see their sales quicker than they do, and we can reconcile and consolidate those. They have to wait a couple of weeks for their MI. We've actually got better MI. And this also leads us into another area that we're very interested in helping insurers with, And that's the management of cash flow. Because ultimately, insurers are obviously investing for a return in excess of the claims made, but essentially they're an investment management company who analyse risk. Yeah. And so therefore, they're very good at investing money over the short term or over the longer term. But what I do find a bit perplexing with some insurers is that a lot of that money that's collected from the acquiring side of things, from paying for the policy, will sit stuck in accounts for a few days or weeks, and there's no connection neither with that payment flow into what needs to be paid out for the claims. They're two entirely separate parts of the organisation. We see that as a major opportunity for insurers. If you're managing that pay-in, that payout on a single platform, then you can do a lot with that. You can absolutely reduce the amount of the amount of cash that you need to fund that business. You can speed it up dramatically, and you can also if you can measure something, you can also manage it. You can do something more with it. You can devote more of that to the investment management fund that is what an insurer really in its core is its principal activity. So we call that intelligent money movement, and as I say, it's connecting the pay in to the payout, but reducing the amount of time that capital is trapped, stuck, or just sitting on someone else's account instead of the insurers.
Yeah, absolutely. It's funny. I was thinking about this before we started recording. I worked at Morgan Stanley and Goldman Sachs for years. And these are just like pure money businesses, right? Money in, money out, all day, every day, trading back and forth. Yeah. And I never spent a moment thinking about like how that money was getting paid. Not a second. Yeah. And I say this with the deepest amount of respect and confidence. Like I look at Chubb and Seb, this is for you in a way, as like the Goldman Sachs of insurers, just because the interactions with the people that I've had there has been so incredible. And I was literally dealing with money every single day, and I never thought for a second about how that money got paid. And I don't think anybody ever did. Anyway.
And it's a lot of money.
Yeah, none of these numbers are trivial. I once did a $12 billion trade. So none of these numbers are trivial. Yeah. Do you want to talk a little bit more about the research that you did with Ernst & Young? Maybe dig a little bit deeper into that, what you learned about the expectation of today's insurance customers' payments. So you mentioned it a little bit, but if there's anything else you'd like to cover, that would be great.
I've explained the thought process of it's being seen as a blind spot, and it isn't, and it actually being easier to fix than many insurers think. But I think it's also made it quite clear, I think, that there's a new standard, and if you're going to be competitive in this market in insurance, regardless of whether you're embedded, whether you're insurtech or a traditional insurer, you've got to raise the bar, because others are raising the ante, the embedded providers, the innovative insurtech. So, what you thought was acceptable isn't, and in order to survive, you've really got to be, if you can't accept Apple Pay today, there's something wrong. If it isn't a seamless checkout, then the evidence is there. People don't like it. They will drop out of that purchase decision making, and that was the great thing with the Ernst & Young survey, that we had clear evidence that customers are just not prepared to put up with second best. Number two, it's actually more challenging than that, because actually the research tells us that actually payments can be a competitive advantage. So if you really do innovate, if you make it a differentiator, then it's going to be great for you establishing your market share and growing more. And that's exactly what the insurtechs have done. So you've got to get to a certain standard, but then you've got to keep on innovating as well. And again, back to where we started, really, that if you want to take cost out of your business, let's just take that one for a minute. Taking cost out of the business. I mean, buying insurance is not like buying a pair of shoes. If, for example, that payment doesn't work, you've got a headache. You've got a real bad headache. If you're an auto insurer, you could have someone thinking they're insured going and driving around while you're trying to ring them up or send them letters. And if you can't get in contact with them, or if they don't get back in contact with you, you've got to withdraw that policy, and that's not good.
No,
there's some bad stories that can come out of that.
Yeah,
exactly.
Yeah. So
exactly.
Builds more servicing cost into it, and everything.
Well, yeah, people ringing the call center, or So you've got to get these things done once and right, And I think, and again, insurers don't necessarily see it in that way. They don't look at the bigger picture. They think about maybe simply the processing costs that they have, rather than the convenience to their customers, and rather than the cost implication that they have to their operations.
No, I definitely agree with that. I definitely see that. Actually, if I may ask a question, Mike, to Adrian,
please.
How do you get people to change?
It's a challenge. It's psychological as much as anything else, and that's why we've deliberately developed an insurance proposition that talks to what insurers are interested in, rather than necessarily just pushing the payment side of things, because that's the only way you're going to be
speaking in their language. Yeah,
it's the only way we're going to be able to grab their attention.
Absolutely.
And actually to give it the sponsorship that it needs. Because I think for many insurers, that, as I said before, the responsibility of payments is generally such a low level in the organisation.
Yeah.
It's not consummate with the impact that it can have on the business.
Yeah.
Now, I do believe that the way in which we've engaged in those conversations, and the reason why I'm keen to do podcasts like this is because we want to be at the forefront of new thinking for insurance, not just about payments, just generally about insurance. And this tactic is definitely paying off. I'm sure you won't mind me saying that Adyen now provides services to 6 out of the top 10 global P&C insurers. We've got over 62 insurance clients globally. And this didn't happen by accident. It's very much deliberate. We saw insurance as a very attractive market vertical. I mean, if you actually take the complete number of policies written per annum, including B2B as well, but I mean, it's an equivalent size of online retail, which people find very hard to believe sometimes. But insurance is a huge market.
Yeah,
it's having been someone who's worked in insurance and consulted in insurance for many years, it's actually at a very interesting tipping point at the minute, because for many years we talked about digital transformation. It is actually now happening.
Yeah.
And also from an Adyen perspective, there's a really good product market fit with what we do, the money in, the money out, the money movement, single global platform. So this has been deliberate. Our stories, the way in which we've built our proposition has been deliberate, and they seem to be resonating, because the success we've had over the last couple of years is very much testament to that. But there's still a lot further that the industry needs to go. But a lot of it is around selling in the business benefits of payments that are not obvious to many people working in insurance.
I think what I love about working with you guys as well is obviously it's got this great culture. You've got this really sort of, you're kind of very open-minded commercial culture, which I love, and very very similar here at Chubb. But also you've got all those insights with all those other platforms. It's just amazing. The other businesses you support, like consumer tech companies that you support. And this is, in where I work, this is kind of where we look to take inspiration. So we look to the Ubers and the Just Eats and the TransferWises of this world to how are they engaging? How do they work with their customers? How do they satisfy customer needs and solve problems? And you guys obviously kind of sit in between as this kind of key infrastructure partner to both the insurance industry and consumer technology enterprise businesses. And so just being able to kind of share insights on both of those has been very, very enriching, very rewarding. And I think is a real sort of string to your bow, Adrian.
Well, that's very kind of you to say so, Seb. And I think, I see Chubb and Adyen as being great partners together. I think partly because of what you're trying to achieve and your market-leading, undoubtedly market-leading stance in this market. But I think also the types of enterprises that you want to work with, and also your distribution into SMBs as well. And I think what we're developing at the minute with you is a kind of multi-sided model, where we can introduce you to some of our largest retail clients who have an expressed interest in embedded insurance, because that's the future. We all see the compound annual growth rate. They do too. If that's integrated within their payments provider, that's great. But also for many of our platforms as well. I'm sure we'll go on and talk about insurance gaps in SMB. But we've got a deliberate policy of working with those vertical SaaS platforms that do such a brilliant job in servicing SMBs. And that's our distribution strategy.
Yeah.
And I just think there's lots of really interesting possibilities for us to jointly combine in terms of helping businesses to ensure they're sustainable and they are insured for appropriate risk.
Adrian, we talked a little bit about how some insurers see this as like a downstream process. And I'm curious because you asked about this mindset thing, right? But also, Adrian has mentioned how massive the market looks to Adyen. But from your perspective, if it moves from just a downstream activity into like an upstream activity where people are actually thinking, wait a second, if we can make our payments more seamless, more frictionless, if we can make it easier for people to pay us, does it open up new markets for you? And then when you look at the experience that has been had by Uber Eats and other platforms like this, how does that inspire you to then look at new markets?
By any objective analysis, individuals and businesses have an insurance gap.
Yeah.
Now, I'm not suggesting for 1 minute that people consider the purchase of insurance in a positive way. It's being commoditized. It's often considered short term, and there's less of an emphasis on the policy terms, what's actually being covered, or indeed the exclusions. But the fundamental point remains that how relevant can insurance be in a modern digital environment? And this is why embedded insurance, I think, is such an important aspect of this.
Yeah, no, and I think one of the reasons why, and I've had personal experience of this, when I've needed a policy and it works, the memory and experience I have is overwhelmingly positive. I mean, I've needed insurance for some really critical things in my life, and it's made a significant difference. And because they were really relevant. And I think people get upset and annoyed about insurance when, it's kind of not really relevant, or it's kind of a gray area in how it's described and what the exclusions might be, which is completely understandable. And I think what's changed is now customers just aren't going to buy anything they don't very clearly understand and that's highly relevant. So when it's digital and when it's seamless, etc., and someone buys it, generally speaking, they are engaging with it in a positive way, because they wouldn't even bother otherwise, because the customer's so ruthless in a sense that they wouldn't even give you the 2 minutes or whatever it takes to go through 5 screens or whatever, which is fair enough. I'm exactly the same. But if someone is making the effort to transact, they're having a positive experience, definitely. And the likelihood is it's relevant, it'll trigger and make a difference in the event that they need it. So I think people's perception of insurance, certainly on the consumer side, is gonna massively change. If something's relevant and it works, why wouldn't you be happy?
And can I ask a question? Do you think younger demographics are getting more used to this idea of buying insurance at the point of purchase of the relevant item they're buying? Yeah,
good point. Yes, absolutely. I think there was some study done that actually the people to sell insurance when you're trying to get Gen X or not Gen X, Gen Z, get Gen Z buying insurance, you actually need to sell that to their mothers, because they buy all their stuff. But I think yes, because Gen Z, for example, exists way more online. They probably have way less trust in traditional big business, big industry, because that's just a trend. So if something pops up that's really relevant and the value is clearly explained, and the price is good, then you can imagine you'd have a lot of success.
Yeah.
Because it would just be a kind of why not purchase.
I think the evidence is definitely there.
Yeah.
I mean, whether it's taking out insurance when you go on that 1 week holiday.
Yeah.
What's the point of having a 12-month policy? I think
exactly.
How many young people think of this. But what's their most precious item? Their phone, and just
totally.
kind of insuring that against theft or accidental loss. I mean, the figures are staggering.
Yeah.
A lot of people take that out.
Yeah, they do, especially in the UK.
Yeah.
I think we buy more travel. I buy travel pretty much every time I go on holiday. I've now probably got like 50 policies, swirling around. But it's just, I don't know. I think it's an English thing. I just always buy it. But I mean, it's just there and it's like quite cheap. And you just think, well, why not?
But can I make the point, if you don't mind me saying, Seb, and I'd love you to react to this. It's like when you go on vacation and when you take a holiday, right? You're not going to be stressed out. You're going to relax. So if you can take care of any type of, if you can take care of any type of contingency with some insurance coverage, you have to be super happy to do that, whether you're in the UK or in the US or in Asia, because particularly if you're going with your family, do you want to be the person who has to, because I've been through this, right? You get like the flight's late, you're going to miss your next flight, you've already booked the hotel, and you're like, who's going to solve this for me? But if you have coverage,
no, totally,
all the stress is gone, because it just, and if the payment system is set up properly and it's embedded, it's just like almost all automatic, right? So it's a much better experience, no?
That's called parametric insurance,
Yep.
where it's all automated and the claim happens automatically. There's third-party data providers who confirm that a flight was cancelled or delayed,
Simple stuff.
and then a payout is automatically done by Adyen, for example. Your virtual card appears on your phone. You're ready to go. You haven't even done anything. You've just received some money. So yeah. I mean, and to your point about reducing anxiety, anxiety being the word du jour as well. So
fair enough.
But I think that's true, especially in tech. Like take Airbnb, for example. One of the key things that really helped them surmount or help users get more comfortable with Airbnb was having insurance attached.
Yeah, exactly.
Because it was still like a bit of a weird concept. And it's like, oh, well, actually, if I'm getting... if I'm doing the renting out, for example, if you're a host and you can get, damage or theft or whatever, it just legitimizes and reduces anxiety. And obviously a lot of great platforms today are, relatively new. And so people need something to kind of bubble wrap the kind of first time using the experience, kind of make it sort of seem more comfortable. And ultimately, there are so many examples now online where you've got, whether it be e-commerce merchant sellers or whoever it might be, or creators is a good example, where you've got people suddenly running multi-million-dollar businesses and they actually don't have any insurance because they're just existing online, doing their thing, and there hasn't been any traditional, phone call from a broker saying, hey, you run a business, we should talk about the insurance you need, because everything's shifted online. So there's this whole world of risk that isn't being addressed and covered, and that's an opportunity, obviously.
Yeah, the SMB insurance gap is huge.
It hasn't been cracked,
there's no one obvious place to go for that advice. And I totally take your point there. I mean, the providers of services to them, be they the accounting software, be they the banking services, they're so behind in thinking about how they could augment their product to serve their customers better, because it's about sustainability.
As to your point earlier about intermediated market, because brokers basically serve the SMB market traditionally. So, you set up your company's house in the UK, which is our, basically our registration authority. And then normally, immediately, you get a few letters, don't you? You get someone wanting to sell you insurance, someone wanting to sell you legal services or whatever it might be, marketing services. And then, you're going to register, and some broker could give you a call and ask if you've got the right insurances set up. But now, if you're going online, you're getting going, you might not even bother, you might just set up a business account through your digital bank, and your business could grow really quickly. But you're running into a minefield, cyber risk or business interruption or key man. So if you fall ill and you can't do the work, your business suffers. All of those things. all of this stuff can really neutralize your growth or neutralize your business.
And that's why I'm really excited about these vertical SaaS platforms, because they understand the market that they're operating in intimately. In terms of dynamics, what's happening there, but also they understand their customers' business very, very well. Because they see the payments coming. You basically see the trends, see the flows, exactly.
See how seasonal it is.
And they could give a lot more strategic advice as to precisely where they consider that insurance gap to be. So I think this is a big growth area for the future.
You spent a little bit of time already talking about SMEs and SMBs, but I'd like to make the contention that, and you triggered this in my head just now, the new SMEs and SMBs that are getting built are different than the ones that were getting built in the past, right? There's this generational change that's taking place where, like, let's say your grandfather started a printing business, your father was running that printing business, but you woke up one day and said, I don't want to be in the printing business, I want to be in the e-commerce business, right? So, and the reason why I'm thinking about this is because I was at a meetup 3 nights ago in my building of like 20 to 25 guys from all over the world, actually, that were living in Bangkok. And all of them were either e-commerce providers or marketers for e-commerce providers. But these guys are making enough money so that they can actually buy $2 million, $3 million apartments. And my question is, they're already digitally native. But how do you attack or kind of cover that market that's non-traditional SME and SMB? They're not making $100 million a year, but they could be making, 5 to 7, which is pretty good for an SME or an SME. They could be making 15, and they're all online anyway. How do you address those markets, Seb? Right, because these are all new businesses.
That's the $1 trillion question, Mike. How do you get? We're still trying to crack that code, but I think honestly, let's take e-commerce. Obviously, let's take an obvious business like Shopify or someone like that. Shopify is infrastructure for e-commerce sellers, right? So provides you with all the tools you need to buy and sell. Getting embedded into those platforms and getting in front of customers is the obvious first step. Then it's, what's the product, or what are the product packages that are going to be digestible and relevant and scalable, etc. In a sense, it's quite straightforward. But actually, when you're in the weeds, it's very, very hard to ensure that you're reaching people in the right way. The platform needs to be working with you to market the product. You need to be getting feedback from the customers. You need to be making sure that the pricing is right. The claims experience is really good and seamless. That there's a lot there, but I'm very, very optimistic about it because it's so much less fragmented. Whereas SMB is the market is fragmented by nature. But these days, as you say, you've got hundreds of thousands of merchants on one platform.
Yep.
Maybe on several. But let's say, just for example, you can access and provide value via one platform, which you just couldn't do before.
It's a multi-sided market as well, right? Because you can actually offer products to the sellers.
Yep.
But then you can also, the sellers, their clients as well, may want protection for the products they're buying. So you're opening up this gigantic market where the stuff that both of you do fits in perfectly, yeah?
Yep. 100%. So that's why it's very exciting that the scale, the scale of value that you can offer is insane. But where you're trying to retrofit traditional pricing and products, but I think over time we're going to get that right. We're going to start making products much more digital, much more relevant, and to capture that market. So we're excited, very excited about it.
I think the digital economy has changed the method of production, hasn't it?
Yeah.
And so I think for those sorts of businesses that you're referring to, Michael, I think I think for me, it's a lot about continuity of that business. And it's actually thinking about what provides continuity for that business. It's insuring the kit they have. It's taking out cyber insurance. It's potentially considering private medical insurance because of the individuals creating. So it's a package of insurance policies that should be customized and specified to these new type of emerging companies, because they're this fundamentally, although they're doing something very different, they're fundamentally the same as any other business. They need to make revenue, they need to make profit, but crucially, they need to have working capital. And if they don't have those, then they'll go out of business.
One-man bands, to your point about e-commerce merchants. So what we've seen is, people are obviously going down this route now of just making money as, one-man bands, but obviously they're making as much money as small businesses are. To your point about people buying, $2-3 million apartments in Bangkok, they're probably making, tens of $1 million a year, if not hundreds. And they might just be one person with a bunch of, suppliers, etc., and maybe someone who does the website and the payments. But those people still need the same insurances that you would have if you're working at a large corporation. So you need your health cover.
Exactly. When I was working at Goldman Sachs, right, the guy next to me and the gal sitting next to me, we all had the same insurance company serving us. So we didn't even really get to choose, right? And that was perfectly fine. But we were in this big, corporate pool. But the guys and gals, and we'll just use Shopify as an example because you brought it up, the guy and gal that are working there as well, they're not physically sitting next to each other, but they're kind of digitally sitting next to each other. And that, to me, is a massive market that's attackable.
100%. I mean, it's insane. There's so much out there, and also a medical bill. I mean, in the States, especially. I mean, if you have, something really goes wrong, it could be a very sizable chunk, hundreds of thousands of dollars for an operation, right? So.
Well, I was just thinking to myself here, I'm probably in the wrong job. Because if I could host an insurance podcast and live in a $3 million apartment in Singapore,
I'm not living in a $3 million. I did not buy the apartment. I was not making that point. I'm renting, but I understand the point. I was wondering if I was in the right job. Actually, fair enough.
No, look. In all seriousness, I appreciate the opportunity to speak to you, gentlemen. I think it's a really stimulating topic. It's not talked about enough. We're really proud of our relationship with Chubb. And we see some incredible opportunities to work together as we solve this particular issue about more relevant insurance delivered at the point of purchase. I couldn't be more excited.
Yeah.
Okay.
No, thank you very much.
Adrian Davis, Commercial Leader, Financial Services, Insurance and Enterprise Financial Products at Adyen, and Sebastian de Zulueta, Head of Digital Business EMEA, Consumer Lines at Chubb. You were both amazing. Thank you so much for doing this today. I really appreciate your time.
Thanks, Michael.
Thank you, Michael.
Fantastic. Thank you. You guys were awesome.